here live from Bloomberg's world headquarters in Midtown Manhattan. I'm Matt Miller.
And from our studios in Washington, D.C., I'm Kailey Leinz. Welcome to Bloomberg Crypto, a look at the people, transactions, and technology shaping the world of decentralized finance. Coming up, an SEC crackdown. Gary Gensler, the head of the U.S. regulator, has strong words for Binance and Coinbase as he brings suit against them both.
We'll get reaction on what this might mean for the industry and future regulation when we talk to the CEOs of the LMAX Group, which is an institutional exchange operator, and the stablecoin Circle.
And as the SEC makes its legal push, a House hearing on Capitol Hill today offers a glimpse into a possible regulatory framework for digital assets. So all of that is ahead. We have a lot to talk about today. But first, let's get a snapshot of the market action. The best way to do that on your Bloomberg terminal, CRYP Go. And what you will find is it is a bit of a rebound day across digital assets after the initial Binance suit yesterday really hit risk sentiment across the board. Bitcoin on the day up about 3%. We're trading around $26,412. While Ether also is up in the range of about 3%. Binance Coin on the rebound, too. Remember, it fell as much as 13% yesterday. Today, it's higher by 4.5%. But then Coinbase, Matt, of course, the story of the day. This is a stock, a public company that the SEC has brought suit against, saying that it violated securities laws. And that stock taking it on the chin as a result, down 13.5% at this point in the session.
Yeah, actually recovering a little bit of the initial drop that we saw right after the headlines crossed. Now, the SEC's suits against two of the most well-known crypto firms are reverberating across the industry. Earlier, Bloomberg's David Weston caught up with the SEC chair, Gary Gensler, who discussed his biggest crypto concerns.
I think the crypto industry more broadly, if it's going to have any success going forward, has to come into compliance with basic public policy about disclosure, about avoiding conflicts, about properly segregating customer funds and guarding against fraud and manipulation. Without that, this whole area stands a chance of collapsing like a house of cards.
Now, joining us on set with more is Elliot Stein, Bloomberg Intelligence Senior Analyst for Financials Litigation. And Elliot, before we even get to the potential of commingling of funds and, using different technologies to evade geolocation, the definition of what a security is key here.
Yeah, it's absolutely key because that's what gives the SEC jurisdiction over these companies. Unless securities are involved, the SEC can't sue Binance, it can't sue Coinbase. And so, we've seen this play out over many cases, over many months now, and it's really one of the most interesting legal issues in crypto right now.
Well, and we're continuing to get updates on this story, Elliot. We just got a statement out from Coinbase's CEO, Brian Armstrong, who says the SEC and CFTC have made conflicting statements. He says the SEC enforcement approach is harming America, that they tried repeatedly to register and there is no path. But Armstrong says he's confident in facts in the law. On the registration point, Elliot, how true is that? Because we hear that a lot, that come in to register doesn't actually mean you can come in and register.
Yeah, I mean, we've heard that from Brian Armstrong and many others in the crypto industry. And Gary Gensler in response says, it's as easy as registering on a website. The truth is probably somewhere in the middle there. I don't think it's as easy as Gary Gensler says, for sure. But, they need to figure out a way to get these products registered. I do think Coinbase has some viable defenses in this case that is going to take some time to play out. We're just at the beginning of this litigation. If you look at the SEC versus Ripple case, we're 2.5 years into that, and we don't really even have a decision as to whether we're going to go to trial. So this is going to be a long road.
All right, Elliot, thanks for stepping in. Very quick, a lot of breaking news, a lot of moving parts here. Elliot Stein there of Bloomberg Intelligence. You can follow his work by typing BIGO. Joining us now to talk more about this is Mark Palmer, analyst at Berenberg Capital. Mark has a hold rating on Coinbase with a $55 price target. And Mark, we've been getting the idea for the past few weeks that Gensler considers pretty much everything a security, right? How does a company like Coinbase deal with that? Is there any way for them to come into compliance?
Well, an important distinction is that Gensler is calling pretty much all crypto security except for Bitcoin. And
right,
that's it's an important distinction. But with that said, Bitcoin is, of course, trading on Coinbase's platform. They don't make much money doing so. Frankly, most platforms now are offering Bitcoin trading without a fee. It would be extremely difficult, in our view, for Coinbase to fully comply with what Gensler is asking in the way he's asking them to do it, because by their definition, staking is the creation of unregistered securities. That's about 10% of the revenue. About 27% of the revenue comes from the trading of crypto tokens outside of Bitcoin. That's an enormous swath. Now, the case that was brought against Coinbase only referenced 13 particular tokens, which was interesting because one of them was not Ethereum or Ether, the token that's traded.
None of them was Ethereum.
None was, and nor was Ethereum mentioned in the case that the SEC brought against Binance yesterday. But the list of tokens that are considered by the SEC to be securities is growing, and we don't believe that they're done yet.
So we define a security, or we interpret the SEC's definition as anything where investors buy it to fund a company or a project with the intention of profiting from those efforts. And under that definition, staking would be considered a security. How can they register these coins? How can they register these activities with the SEC?
I don't believe that they can. I think that the only answer along those lines would be converting all of these crypto tokens into security tokens, which is a whole other ball of wax. Right now, the reality is that almost everything that's out in the Web3 ecosystem, with the exception of some of the infrastructure projects built on blockchain, falls under this heading of unregistered securities, unregistered platforms within the U.S. So the question then is, are we going to see an evolution of the space within the U.S.? Or are we simply going to see platforms move offshore in order to continue to operate?
Well, and that's something we hear often, Mark, that all of this activity just moves elsewhere because of the environment here in the U.S. But when we think about that from what this means from a competitive standpoint in terms of Coinbase's market share, as you kind of are suggesting here, this is not a unique Coinbase problem, what the SEC is trying to do and kind of classifying everything as securities. But I wonder if it's more a sentiment hit that if you know Coinbase is facing an SEC lawsuit, we saw what happened with prices yesterday, that this just kind of drags on activity on the exchange itself.
Yeah, we agree. I mean, part of the reason why we have a hold on Coinbase shares is because we believe that the SEC's crackdown is going to represent an overhang on the stock for quite some time. We don't anticipate that there's going to be a resolution. We can't see a way that Coinbase is going to be able to easily settle any of these cases. At the same time, Coinbase today was hit with a show cause order from a number of different states that are basically compelling it to come forward and explain why its staking services are legal. And that's going to open up a lot of new questions as well. But the upshot here is that Coinbase is really stuck between a rock and a hard place. And I think investors are going to start to look at its ability to pivot offshore. In the first quarter, Coinbase generated about 86% of its net revenue in the U.S. So this is not a small task.
Well, as we talk about kind of that U.S. exposure as well, is there any U.S.-based public crypto company that you think is safe to hold at this point with this kind of regulatory scrutiny, Mark?
Actually, we are bullish on MicroStrategy, which MicroStrategy is all about buying and holding Bitcoin. At last report, it held 142,500 Bitcoins. The reality is that the crypto market in 2023 is under attack by regulators, and the one safe haven is Bitcoin. So MicroStrategy, which has at the center of its focus holding Bitcoin, is also a safe haven in our view. Today, when Coinbase's stock has been under pressure, we've actually seen MicroStrategy rallying. Part of that is because they announced an AI partnership with Microsoft, because in addition to being a holder of Bitcoin, MicroStrategy offers a business intelligence software unit that is now integrating AI. So in addition to being a play on Bitcoin, MicroStrategy is now a play on AI.
All right, Mark, we got to leave it there. But thank you so much for joining us today as we all assess this story that has really taken us by storm on this Tuesday. Berenberg's Mark Palmer, thank you so much. We appreciate the insight. And of course, Matt, we all have our eyes on what is happening in crypto world today. But I just came here from Capitol Hill. I was actually at a House Agriculture Committee meeting on digital assets, talking about the role of the CFTC. The chair was testifying there. And then outside of the Capitol building, I also was catching up with JP Morgan CEO Jamie Dimon. I asked him also a regulation question, what his response was to reports that the Fed may be increasing capital requirements for banks such as his by 20%. And he just basically said, Matt, that he hopes regulators will be careful. Yeah, it's always great to run into the most powerful CEO on Wall Street when you're hanging around outside Capitol Hill. My question to him would be maybe not as newsworthy or pertinent to the economy, but what about the possibility of a presidential run? He kind of piqued our interest when he said he would consider public service, possible public office, and then everyone looks to 2024. Did you get to ask him about that? Yeah, we did. Another reporter was there with me as well and said, do you plan for a run for president? Jamie Dimon referenced the statement that the JP Morgan spokesperson put out that said he had no intention. And I said, no intention in 2024 or ever, to which he responded that he never says never to anything. So not exactly shutting the door there to that, Matt. But we also talked about just the banking system as a whole. I asked what his message would be to the Democratic lawmakers he's meeting with today about the health of banks and the economy. This is what he said.
Yeah, I think we've been quite clear. I think it's actually quite strong, and there's some very isolated events out there, and hopefully that's over. I doubt it. So he doubts JP Morgan's going to have to buy more banks. But back to the original reason why I was at the Hill today, that House Agriculture Committee hearing on crypto market structure, what regulators should have jurisdiction over what. I caught up with some of the representatives in the hallway outside that hearing. Here's what some of them had to say.
There are gaps in the regulatory framework.
Gaps, and I think to protect the public.
We need to fill that gap between the CFTC and the SEC.
We have the opportunity for the SEC to have that control of securities, and we have the opportunity for the CFTC to really take control of commodities.
Our bill is the right approach.
I think we're all struggling on both sides of the aisle.
What the SEC has done is only clouded this issue even more.
Fascinating timing.
What we do not want to see, though, is a administrative element like the SEC trying to empire build before we've even got the legislation to the floor.
All right, let's continue this conversation. Joining us now is David Mercer, the CEO of LMAX Group, which operates the institutional crypto exchange LMAX Digital. David, great to see you again. You and I have spoken before about the need for regulatory clarity in this industry for adoption to really take hold. But if we could first get your response to the lawsuits we have seen brought against exchanges in the last 24 hours. Do you anticipate that will impact LMAX at all?
Great to be here today, Kailey. I think overall this is positive. What we've been asking for is regulatory clarity. And number one on that clarification is consumer protection. So everything we see is about consumer protection. And if you look at what's happened over the last 12 months, ultimately consumers have been damaged by that, by bad actor behavior. So we want that clarity from regulators, but also from an industry perspective, it's important to act as if regulated at all times, whether or not there's regulation in your jurisdiction or not.
Does that mean you're going to have to stop allowing the exchange of certain cryptocurrencies? I mean, have you looked at the list of what the SEC considers an unregistered security, and do you trade any of those now?
So we're not regulated in the United States, so we operate in Europe. I think there's 61 tokens that would be recognized as securities in the United States. So I think it'd be foolhardy for any exchange who's US-based to list those and trade those. At LMAX Digital, 70% of what we trade is Bitcoin and Ethereum. They're not captured. And then otherwise, none of them would be on the securities register today.
By the way, in terms of, you operate an FX exchange as well for institutions. So it's not just crypto for you, you have other businesses. Are they the same traders? Do the same institutions trade with you, foreign currencies as do cryptos?
The overlap is kind of 90%. in that we have 10% would be crypto native, but the largest proprietary trading firms in the world across all assets, including foreign exchange, are the biggest in crypto today. And in fact, that's the reason we came into being in 2018. LMAX Digital's in its 6th year of operation, and it was on request from those large proprietary trading firms mostly.
I want to bring back us, David, to the conversation that our colleague David Weston had with SEC Chairman Gary Gensler earlier today, because he had a message to investment advisors in this conversation. This is what he said.
I would say this to all of those investment advisors out there that may be interested in trading in crypto. Your client funds, under an existing 2009 rule, have to be proper qualified custodians, and that's not what you have on Binance. Make no mistake. In fact, as we alleged, your funds in custody at Binance, you don't even know really who's where it is.
So obviously he's talking about Binance specifically there, David, but in terms of the tenor of conversations you're having with investment advisors and institutional players in this space, have they changed as a result of what we have seen really, I would say, over the last 7 months at this point?
So I think what's important there is separation of function and segregation of client funds. I mean, that is the standard in traditional finance and should be the standard in crypto markets as well. Certainly that's how we operate within LMAX Group and in LMAX Digital. To answer your question specifically, look, you're seeing more reticence from large American market makers. I believe many of them have stopped making markets in US crypto exchanges because, quite simply, the risk reward isn't good enough. There's too much risk and not enough reward. Not one of them has stopped trading on LMAX Digital because of our European jurisdiction, and I don't think they will in the short term, but I think we need clarification in the United States specifically.
And just a final question for you. Obviously, we've talked at length about regulation, but are there other risks that you are worried about at this point, David, and what might they be?
It's not so much risk, but definitely the lack of regulatory clarity has stopped or slowed down institutional adoption. We need the gateways to capital are the banks. So we need that credit intermediation, we need that market access, and we need thorough on-ramping or banking. I think the lack of clarity in the US has slowed that adoption down. And if you look at total capital markets, 50% of the world's assets in custody sit in American bank custody today. So, yeah, we need the clarification so that we can truly have the institutional adoption which we all expect.
So you deal with the biggest institutions in the world, as you pointed out. Are any of them finding any utility in these tokens, or are they just tools of speculation?
Well, I think what's clear is that blockchain will be the backbone to all capital markets and traditional finance in the decades ahead. So you're seeing bulge bracket banks making investments upwards of $10 billion in the last 3 years. So that bit's inevitable. If you believe in a digital back office, you must have a digital or tokenized front office.
All right. Great talking to you, David. Hope we can get you back. David Mercer there, the CEO of the LMAX Group, talking to us about the really important institutional part, which is obviously huge for the future of these assets. Joining us now to talk about his stablecoin, Jeremy Allaire is the co-founder and CEO of the stablecoin issuer Circle. And Jeremy, I'd first like to get your reaction to these suits. They weren't entirely unexpected, but as one of the congressmen with whom Kailey was speaking said, the timing is certainly fascinating.
Certainly agree. I mean, I think these are long expected kind of actions, and obviously the timing is right on the cusp of Congress very seriously considering stablecoin and digital asset market regulation. We now effectively have the three branches of government, the courts, various administrative regulatory actions, but also administrative cues. The Fed and Treasury very clearly signaling they want to see stablecoin legislation, and Congress now fully engaged on these topics. And so the government has a lot of work to do. All three branches of the government have a lot of work to do here. And this is a critical issue that's going to shape, as your prior guest noted, I think the future of our financial system. And so it's high time for these to be hotly considered and debated and resolved.
Well, Jeremy, it's great to see you here in Washington, where so many of these conversations are happening. And as we talk about the legislative moves forward, it seemed when I was in that Agriculture Committee hearing today that there's real momentum. They really do want to get something. That, of course, is related to market structure, but there's stablecoin bills that have been put forward as well. Less so stablecoin related in the market structure bill. There was some, though. What do you think about that legislation? What would it mean for Circle?
Yeah, well, there are these twin pillar legislative initiatives. There's stablecoin bill, and there's both Republican and Democratic efforts around that. And I think that is very clearly a bipartisan issue that also the administration is weighing in on. And then the market structure bill, and these are really key. Stablecoins are really a cash equivalent form of payment instrument. And as is, around the world, basically, central banks, prudential regulators, laws are being passed in Japan, in the entire European Union, and in other leading markets. And so the United States is lagging behind. Clearly an opportunity there. And I think for certainly a stablecoin issuer such as Circle, taking what we've done as a payment system innovation under state regulation and establishing a national set of federal standards for that is going to be critical. It's going to unlock an enormous number of use cases for digital dollars, which is a critical issue right now for the dollar itself.
Well, on that point, do you think it is going to be dollar-denominated stablecoins that continue to dominate as we're talking about other parts of the world moving quicker on this?
Well, this is the critical issue facing the United States as a whole. There's an enormous amount of talk about de-dollarization. And in the past, people kind of have written that off. But now there's real actions being taken. We're seeing news every day about various bilateral trade, pricing agreements, alternative payment systems being built. And the question for the United States government, the question for Congress is, do we want the dollar to be the currency of the internet? Do we want digital dollars to be the preferred digital asset that are used for conducting trade and commerce and to undergird this evolution of the financial system? I clearly believe the answer is yes. But the United States needs to step forward and pass clear national laws for digital dollars so that they can become a preeminent export product around the world and building on the private sector innovation that's already happening.
You don't, though, to be clear, have any plans, Jeremy, to issue digital yuan or digital euros?
So we, in fact, have issued a digital euro stablecoin. We began experimenting with that last year, and we are in the process of registering under new European rules through France, setting up an operation in France, and intend to bring that product under the new stablecoin legislation and stablecoin rules that the EU has already passed into law. So the EU is ahead on this. They have a region-wide framework for euro stablecoins. We're hoping to be a leading provider of euro stablecoins. But our flagship product is obviously a U.S. dollar stablecoin, USDC. It's one of the most preeminent digital currencies in the world. And we need the United States to get its act together.
When you step back and look at this fight, SEC versus any crypto business operating in the U.S., essentially, is there a way out? We saw a $30 million settlement with Kraken, but they essentially moved all of their business offshore. Is there a way that, Gary Gensler could come to a settlement with Binance and Coinbase and allow them to continue trading at least some crypto coins in the U.S.?
Well, look, the merits of each of these cases and the details of them are obviously substantially different, and I'm not in a position to comment on all of the different claims and allegations and the like. And so there's a lot there. But I think in terms of resolution, the right path forward is to pass new model legislation that in a statutory form defines digital assets, defines how digital assets go from being securities to commodities, what deems something to be a digital commodity. Obviously, deeming payment stablecoins as a cash equivalent payment instrument. This needs to happen. We need to have market structure law. I think the bills that are coming forward are very thoughtful, and they look at the technology and the uniqueness of this technology as it is today. I don't think the square peg, round hole approach of taking laws that have been applied over the past 70 years is the correct way. There's going to be a fusion here that's going to happen, a kind of financial instrument fusion, and I think that's the hard work that Congress has in front of it, and certainly there will be court discussions as well.
Well, and of course, Congress up until recently has been very distracted by the debt ceiling, and that is something that ultimately impacted Circle as well in terms of what you held in reserve and short-term paper. Can you go back to holding that, or are you now thinking differently about your reserve mix? What other assets may take that place?
Well, it was a fascinating exercise where we were concerned about the United States not being able to repay its T-bill debt. And so we took the sort of risk management step to move into reverse repo facilities that allowed us to insulate ourselves from that. Now that the debt ceiling has passed, we're looking very closely at liquidity in the Treasury market, the pricing that's happening with new issues, and then obviously looking at rebalancing cash. These tri-party repo facilities and short-term T-bills. So we will have more to say in terms of what that evolving structure looks like. But we're certainly now moving back towards being able to feel confident in holding short-term government debt.
And we're short on time here, but in about 30 seconds, we've seen Tether's market cap continuing to grow, not the case with USDC. What explains that divergence?
Well, I mean, what we've seen overall is since March and since the beginning of the year, as we've seen more and more regulatory actions, as we saw the U.S. banking crisis and continued concern about U.S. banking system, you've seen what I like to describe as a flight from safety, away from regulated U.S. institutions, away from U.S. banking system. And I think until the U.S. gets its act together on the policy side, those issues may remain.
Okay, we'll leave it there. Thank you so much for your time today, Jeremy Allaire of Circle. We sincerely appreciate it. Thank you so much. And we're still going to have more to come. We'll continue the crypto conversation next with the former SEC Chief Counsel, Tongvin Lee. This is Bloomberg.
Welcome to the BNN Bloomberg and Bloomberg audiences. This is Bloomberg Markets. I'm Amber Kanwar, in for John Ehrlichman.
And I'm Matt Miller. Let's get a quick check on what's going on in the markets right now. We've been up and we've been down. We're looking at a midpoint right now. The S&P had been at its highs 42.85, at its lows 42.65 today. You can see we're trading right now at 42.75 and pretty much unchanged. Also, no movement in the 10-year yield, holding at 370, just where we saw it at this time yesterday. The Bloomberg Dollar Index, very little change at 1241. It is interesting to see crude moving further down right now off 35 cents if you're looking at West Texas Intermediate with a 71 handle, 71.83, even after additional surprise production cuts from OPEC on Sunday. Amber, what are you looking at?
All right, well, let's see if we can find something that's moving a little bit more. I'm taking a look at shares of GitLab and G3. GitLab, IT company, guess what? It's got AI. Not only is it beating expectations, it's also boosting its forecast. Obviously, the market likes that as well. And then I'm tracking G3 Apparel. This is the company that sells Calvin Klein, Tommy Hilfiger, Donna Karan, and retail has not been a slam dunk. Well, it is for G3 Apparel. Not only did they beat expectations, they also boosted the forecast. Different story, though, in crypto land. Coinbase hit with a lawsuit. We knew it was coming from the SEC, but obviously investors taken aback by the 101-page complaint against Coinbase, and we are seeing cryptocurrencies, Matt, fall in tandem.
All right, very interesting news today. Of course, the SEC really topping the list of the things that we're focused on. Its crackdown against crypto continues with suits against Binance yesterday and Coinbase today. Here's what SEC Chair Gary Gensler told Bloomberg he wants to see from these firms.
I think the crypto industry more broadly, if it's going to have any success going forward, has to come into compliance with basic public policy about disclosure, about avoiding conflicts, about properly segregating customer funds and guarding against fraud and manipulation.
For more on this, let's bring in Tong V. Lee, partner and head of regulatory and policy at Bain Capital Crypto. She's a former SEC chief counsel as well. Kailey Leinz from Bloomberg Crypto with us. V, let me first ask you about, Gensler's comments that we just listened to. Is it possible for crypto firms that operate now, for example, Coinbase, could they come into compliance and still exist as a crypto firm?
I mean, the short answer to that is no. And, just to give some context here, Coinbase has been in talks with the SEC for a long time to come up with a model of registration that actually would work for a crypto trading platform. They filed petitions for rulemaking. They've engaged in countless internal discussions with the SEC staff. They came up with their own proposed registration model to try to work with the SEC to, come up with something that both sides could agree to, because the existing securities laws, the existing registration and disclosure models simply don't work for a crypto platform like Coinbase. And I can give you some examples of what I mean.
Okay.
Well, Tong V, before we do that, though, just quickly, are these lawsuits winnable for the SEC, do you think? I mean, how strong realistically is the case?
It's a strong, all of these cases, I think, they're well investigated. And if you're applying a Howey analysis, I certainly think that there are judges out there that, would look at the Howey analysis, apply it to the facts and say, well, if we're just applying this mechanically, not considering sort of the unique aspects of blockchain technology and the unique things about digital assets, certainly a court could apply Howey and find that, unregistered securities were being offered on these types of trading platforms. So I think the cases are winnable. I think it depends on the judge, the way that the judge is looking at it. But I think if you're considering, the way that digital assets differ and the way that these crypto platforms differ from how things work in the traditional securities context, it just is not the case that someone like a company like Coinbase could simply come in and register under the existing laws. It just wouldn't work. By virtue of the technology and the way that blockchain technology works.
Yeah, I was just going to ask. I mean, these rules, you mentioned Howey, if I'm not incorrect, come from 1946, right? I mean, we were just finishing World War II. The internet would have been unimaginable to people back then. Cell phones, I mean, Star Trek didn't even exist. Don't we need new laws to deal with the technology of today?
Absolutely. And, that's not always to say that the securities laws, which were written in a very flexible way, can't adapt to innovations in technology. I think they largely have, right? The internet didn't exist, but when trading started happening on the internet, for the most part, the securities laws were able to adapt to that. And actually, to that point, the SEC did engage in rulemakings to accommodate those kinds of changes, something that they have completely refused to do in the crypto context, right? So just to give an example of why a crypto platform like Coinbase can't come in and simply register under the existing securities laws, digital assets just trade very differently than traditional securities by virtue of the technology, right? So, for example, you can trade crypto 24/7, 365 days a year, whereas with traditional securities exchanges like the New York Stock Exchange, like NASDAQ, they have limited trading hours. So the existing securities laws are just incompatible with the way that digital assets can trade. And then for traditional securities, in order to trade through an exchange, you have to do it through a registered broker, right? Under the securities laws, that's a requirement. With digital assets, something like that's just not necessary because you can conduct trades directly without the need for that sort of intermediary because of how trades on blockchain work. So those are just two examples.
I think there are a lot
of others.
Well, Tongvi, it raises a question about whether these should be classified as digital commodities. And that brings me back to the hearing I was just at on Capitol Hill in the House Agriculture Committee regarding market structure and how the CFTC and SEC should be divvying up jurisdiction. I was speaking with one congressman, Zach Nunn, who also sits on the Financial Services Committee, and he basically was saying that Gary Gensler is trying to empire build here. He isn't waiting for Congress to do the work in setting these jurisdictional barriers. And I just wonder if these SEC cases that are being brought now are ultimately going to be something that they can't actually win, because the actual law that Congress sets will be changing, just the timeline of all of this, because we know these cases can draw out.
That's right. The Ripple case that the SEC brought, for instance, I think was filed in December 2020. So these cases can drag on for quite some time. So yeah, I mean, and the timing with respect to any sort of legislative action that Congress is going to take, of course, it's very unpredictable. But I do think it's interesting that the SEC obviously knows that Congress is very actively working on legislation to create new regulatory frameworks, in some cases amending the existing securities laws to expand or change either the SEC's authority, or in the case of the CFTC, amending the laws there to give them authority that doesn't currently exist over crypto. But Congress is actively working to create a new framework that works for crypto. Obviously, the SEC knows that, but is continuing to bring these enforcement actions under the existing securities laws. I just think that's really interesting.
Given the sloth, of legislation and the SEC's current position, are you concerned that the U.S. industry may be set back versus others? I mean, are we losing a competitive edge here?
Absolutely. I think when it comes to technology, and history has shown this, when it comes to technology and technological innovations, the first mover advantage is so critical, right? And with crypto, I think the U.S. has had a first mover advantage that it is now squandering, because we just have not come up with a workable regulatory framework for crypto companies to be able to operate responsibly and have a path to compliance in the U.S. And this is the completely opposite approach of what other jurisdictions around the world are doing, right? So the EU is coming up with a comprehensive framework that just passed. They're going to start implementing it next year. The UK is working to do the same. Japan, South Korea, Hong Kong, so many jurisdictions around the world are creating new frameworks that make sense for crypto, instead of trying to shoehorn crypto into existing securities laws, because they recognize that crypto is different and demands different kinds of frameworks in order to not just allow innovation to take place, but also to better protect customers, right? If the regulations don't actually fit the way that the technology works, that actually leaves customers and users and investors vulnerable. And so, I would look abroad to see the approach that these other places are taking. And I think more and more crypto businesses are going to move abroad, because the U.S. is just not offering a working framework in the U.S. For innovation to happen. And so, I think that that's going to be something that is potentially really hard, if not impossible, for us to recover from.
V, I would love to get you back on the program. Love to get you in the studio here. So hopefully we can do that. Bain Capital's Tongvi Lee joining us, former SEC chief counsel, now over at Bain Capital. And Kailey, great to hold you over 10 more minutes into this program. Kailey Leinz, I'm sure, will be headed back to Capitol Hill to harass lawmakers. Now, amid this SEC crackdown, Bloomberg is launching a new podcast on Wondery titled Spellcaster. It dives into Sam Bankman-Fried's rise and incredible fall. I guess they were both incredible, the rise and the fall. In terms of celebrity, in terms of wealth, in terms of, well, the alleged fraud is massive as well. Bloomberg's Hannah Miller is the Spellcaster host and reported on the FTX collapse for us. Hannah, thanks so much for joining us on set. Fantastic podcast. I got a chance to start it yesterday. I have access to 4 episodes. I think I'm special in that sense. Tell us about what you've discovered in your reporting here.
Yeah, no, this was such an exciting project to work on. I learned a lot reporting, and it's been incredible to really dive into the origins of FTX and Sam Bankman-Fried himself. He is a very interesting individual. We traced his, childhood growing up on the campus of Stanford to his activity and effective altruism, and we really saw how those themes played into the founding of FTX. And we can see that these themes, what happened with FTX are still relevant today. There are serious parallels in the allegations against Binance that we saw in the accusations against FTX. So yeah, it's still stuff happening here, still a developing story.
Hannah, he's been called kind of at worst a con man and at best incompetent. As you are getting to the essence of who SBF is, are listeners going to get a sense of where the truth lies?
Yeah, it's been very interesting talking to people who knew him in all parts of his life. We got a friend from college. We got an investor who actually passed on investing in Alameda. So it was really interesting to see how people saw this sort of obsession with gameplay early on, that there were these these personas that he would put on, and I think that has been very clear in how he's interacted with lawmakers going forward, how he was able to charm venture capitalists in Silicon Valley. This is someone who knew how to play a game, who knew how to cast a spell, hence the name of our podcast, Spellcaster.
I would just wonder why he didn't do a better job. Why not keep records? Why not organize things? Why not, not break the law?
That is a very good question. And I think a lot of this comes from the fact that this was someone who always thought he was the smartest person in the room. This is someone who had excelled in every aspect of his life. This was someone given huge amounts of responsibility early on, but this was also someone very young, very inexperienced. And I don't think that's necessarily an excuse for what happened here. There are still people who have questions about where their money is, whether they're going to recover their life savings. So, I was thinking about the whole time reporting on this story, that there are still victims out there with many questions.
Hannah, great work. Can't wait to hear the rest of your podcast. Hannah is the host of Spellcaster. You can check it out really anywhere you get your podcasts. I found mine just by typing podcast in the Apple phone. And I think if you subscribe to certain things, then you get like early access and maybe special bonuses, possibly a t-shirt. Coming up, the CEO of Allaire Technologies joins us to discuss its debut as the first company listed across 2 CBOE exchanges. This is Bloomberg.